This is our video blog for January 27th, 2011, and most of us start our trading day by looking at the currency meter. We trade either the dollar or the yen versus the pairs on the bottom, and we prefer to find a currency whose weekly and monthly trend matches the real-time trend. So the dollar is weaker than the yen. The yen has a monthly trend that's down. The weekly trend coming into today was slightly up. The dollar is much weaker than the yen. And so in a perfect day, like you can see today, we have some real weakness here coming up 9:30, 10 o'clock last night Eastern time. You want to sell the weak dollar against one of the stronger ones. The euro has a very strong weekly and monthly trend. So does the New Zealand. So does the Swiss. So let's scroll these back and see coming up to midnight. The euro was very strong, so you'd want to buy the strong euro versus a weak dollar. This one wasn't strong, so you probably would have ignored the Swiss. And the last but not least, the New Zealand, which is also strong. So you have two choices, mainly. Coming up to midnight, you can look for buys in the euro dollar or look for buys in the New Zealand dollar. Strong real-time strength in the New Zealand. Same thing with the euro. The weekly monthly trend is up in the euro. Same thing with the New Zealand, and it's down in the dollar. Here's the euro dollar. Coming up to last night, you can see it pulled back to the hourly. Frequently, the hourly moving average is a great place to look for buys at. And you might have got into a trade, it went up 5 or 10 pips. Really didn't do anything. I suggest using a time stop. Everyone needs to decide on what works best for them. But usually within 20 minutes to an hour, hour and a half, if the currency is just going sideways and I don't see anything causing it to go up, I typically get out. Hopefully with 5 or 10 pip profit, or even a 2 pip profit, or break even, or -3. I don't care, because you can always get back in it. And then later on, this broke above the double narrow range pattern. That's almost always a sign of an explosive move if the weekly and monthly trend are up in this case, and it's above the hourly. So you would have got long here. You knew ahead of time that the previous months and weeks high might have acted as resistance. It's only 10 pips up. And so when it hit it and didn't go past that, usually you're going to get out of the trade. This is one of the perfect reasons why I use the time stop, and why I oftentimes get out of half of trades at major resistance or support areas. Now obviously later in the day, the euro from 3 to 4 was not the strongest of all the pairs. Actually at 3 o'clock here it became extremely weak, and then a little bit later, at 4 it became strong again. You can see the dollar for that brief 1 hour time had a lot of strength. Not all the time when you find on our currency meter that trend's just going to keep going. You can look at the New Zealand dollar now to see the same thing. We had a pullback here, and this trend went up a little bit more than the euro did. It went up about 30 pips. We have the previous week's high here as resistance, and the strength that was there earlier, really the intensity is not there. Anything not near or above or at the dotted white line here shows incredible strength. So if you see it going up or kind of going sideways with no strength, it's a big sign. Let's look at the currency meter a little bit later today. Obviously we had a lot of strength come back in the market in the euro at 4. At 4 o'clock the dollar was no longer the weakest. You can see during the dollar's strength during this hour here, the yen was far weaker, and the weekly and monthly trend shifted pretty strongly down. So at 4 o'clock you'd really be, or 3 or 4 o'clock, you'd be looking for buys in the euro yen, not the euro dollar. And look at this. Here's 3 or 4 o'clock. This one exploded up. You buy that pullback right here, whether you got out right here when the market's kind of going sideways and only made 25 pips, or usually what I do if I get into a trade and it kind of is running out of steam like that, I'll get out. If it pulls back and starts to go back up again, here's the monthly R1 level. I might buy right here, and I'm looking at this as a possible profit target. Here's our fib targets that I spend 45 minutes every night drawing on the chart, which was tonight's high as predicted. And usually these levels where they're a fib target or a gray fib retracement level, when they're outside of the upper containment band, usually that stalls price. So I'm looking anywhere on the way up here for it to stall, and it kind of stalls right up here. You'd be out of your trade up here at 90. This last trade where you bought around 25, you would have got out at 90. Very big profit, small 25 pip profit. And usually when it's above the upper containment band, you don't really want to buy up here because there's really nowhere else for it to go. I'd be very cautious in selling up here. Once it hit, pulled back, hit again, right here when it had some weakness. You might have gone short. It pulled back about 25 pips, and then it kind of ran out of steam. Another reason why you use your time stop. And again, it came back up here again later with 1/4 the strength of before. And because it's so far above the upper containment band, it's also at the whole number, which tends to be resistance. You go short, and you made about 30 pips with a counter trend trade. The point of using this is not all of these trends, when you see one strong and the other one weak, is it going to take off and give you 30 to 50 or more pips. Sometimes you might make 5 or 10 pips, other times you lose your 10 or 15 pip initial risk. But the point is, when these do work, by focusing on the strongest pairs, usually you will catch a big win now and then. That big win eats up all your losses and your small break evens, and you're left at the end of the day, if especially on days that some of the currencies took off and ran, with some nice profits. Now the Australian also was weak, and so coming up to midnight, you could have bought the Euro Australian, because the Euro was strong, the Australian was weak. Let's put this on here. And look at this one. Unlike the Euro dollar, this one actually continued. You have a breakout from underneath to above the hourly moving average. This is a great place to get in, especially when it spends hours underneath the hourly without going down. Very high probability place to get in. This was your first profit target. These up here were your second. If it stalls at the first one, you got to get out of half and then trail your remaining stop. And if it shoots right through there, usually the second one is where you want to get out. You might have bought this pullback right here and the market went sideways. And then when it broke out of this narrow range consolidation rectangle pattern, you go long again. And it went up without that much strength, hit the upper containment band, counter trend sell signal here, you might have got out. You might have even bought this pullback here, which would have been the loser. Usually after a loss like that, I wait for some signs of strength, like breaking back above the previous day's high. So I'd go long back again here, and it comes back up and hits the upper containment band, the previous week's high in our upper containment band. Lots of strength, but usually the upper containment band, if it can't shoot through there, you want to get out of your trade. In this case, you might have made 40 pips on that trade. Because of the extreme strength here, you buy the next pullback, made 20 pips, pulled back again, and notice this low is higher than this low. It's a big sign of strength. Notice on the up moves, it's incredible strong, and the down moves, very little weakness. The daily, weekly, and monthly trend is super strong up. You might have bought this one again when it broke out here, and usually when it's above the upper containment band, it doesn't usually go beyond the fib targets. So if it stalls at the first one, get out of the whole thing. If it goes a little bit beyond that and starts to come down, you want to get out. So you might have got out of that last trade up here at 42. You're in this trade at the whole number. You made 42 pips minus the spread. Now notice also today the New Zealand was very strong. So you would have been selling the Australian New Zealand. Let's take a look at that one. Now this one's not quite as good a trade for one reason. Usually at or underneath the lower containment bands. Sometimes trends continue, but they might come down and then immediately reverse back up. Notice this one kind of had a hard time getting underneath the lower containment band. It hit it, went sideways, went slightly underneath it, and went sideways again, and then eventually, had a nice 50 pip move, and then, quickly reversed. So, this doesn't even compare. It's 1/3 as good as the other trade because you most of the time don't want to sell underneath the lower containment band unless you see extreme weakness. So earlier last night when it broke down right here, you might have gone short, but notice as it came down to the weekly pivot level right here, there's no weakness. Again, when it went extremely weak right here, you might have gone short right here hoping it would continue, and it didn't. Notice on this pullback it has pretty decent strength. You don't really want to buy and hold down there because the daily, weekly, monthly trend are off the charts weak. Now the yen pretty much was one of the weakest ones for about 7 hours. So you could have bought the strong pound yen. Now the only downside of the pound is that the weekly trend was down, the monthly trend was up. Again, real-time strength trumps the weekly and monthly trend, but if you're buying a strong one today but the weekly trend's down, just keep in the back of your head you're less likely to have a big move. If you catch a 20 pip move and it stalls, you might want to get out. If the weekly and monthly trend are up, you might want to be a little bit more cautious about exiting and try to catch the bigger 30 to 50 pip or bigger moves. So 2 o'clock when this became strong, the yen was weak and also the dollar was actually weaker. You'd be looking for pound dollar buys and pound yen buys. Here's the pound dollar coming up to 1 o'clock. It's in a narrow range right here. You might have bought this pullback to the hourly right here, which is a good buy usually. There's lots of resistance above it, and it kind of has trouble there. The weekly trend of this particular pair is down, the monthly trend's up. When it had trouble going up, I probably would have shorted right here. It only came down about 20 pips and then reversed. You want to get out of that trade maybe with half at 15 pip profit and the other half maybe break even. You got to be cautious buying right here with all this major resistance above it, and the market's just kind of going sideways. There's major resistance, lots of selling on the top. You have previous day's high, monthly pivot level, you have the 10-day moving average. It looks like a weekly pivot level. There's so much selling that you probably don't want to be buying until it gets above there. And here's the low of the day. When it came down again and went short, I might have went short again right here because the weekly trend's down. And again, if you shorted this here at 01, it came down about 20 pips, more than enough to exit half your trade with maybe 15 pips and break even on the other half. And me personally, I might have given it a shot earlier when it tried to break out here. I usually will wait after making sure it's not going down. If it double bottoms at the lows down here with almost no momentum, and if it breaks out again above this resistance, I might have went long right here. It went sideways here for half an hour, and it went up to the upper containment band. Weekly pivot levels there. Notice how our white containment bands contain price. It's not the best trade in the world, but you might have made about 40 pips. You're in the trade here about 25, and let's say out at 55. So that's about a 30 pip move. Incredible strength right here. Your first pullback, you might have been looking for an Elliott two-wave pullback right here. And if it goes to the first or second fib target and it stalls and then starts to go back up, you want to buy. In this case, it shot through the 1.618 area, and it also went underneath the hourly. Super strong currencies usually, don't go below the hourly. So breaking the hourly kind of negates this Elliott two-wave, and not finding support at the first or second fib target and going sideways. It broke underneath there. And on the way down, of course, it has incredible weakness. So Elliott two-wave system is not likely to work in this one. Let's take a look at the euro yen. Actually, I think we already did that one. Hold on. Off and on strength and weakness here. The weekly and monthly trend are up, starting at 3. When you have incredible strength right here, you might be looking for buys. I don't usually trade the Swiss yen, but strong Swiss, weak yen, more than likely there were some opportunities in this. Explosive move up, pulls back. Usually without the trend line being broken, in this case it's kind of going sideways. You might have went long right here and had to wait about 15 minutes before the next move. And on the way up, you can see it kind of went above the previous month's high, which is a positive sign, started to come back. Because it's so far above the upper containment band, you probably just want to exit your whole trade up here somewhere around the whole number. You would have got in here maybe at 65, made 35 pips on that trade. Now you never know, sometimes our tools let you see a currency before the breakout happens, other times, which are usually news related, probably in this case, it takes off without you, but you wait for the pullback, then you get in and usually, ride it up. Because usually currencies that go above the upper containment band are extremely strong. You draw your fibs on this, and this is a perfect Elliott wave, two-wave pullback system in its entirety. Notice the difference between this is this found support at the fib target, and it's also above the hourly moving average here. This is what you want to look for buys at, and on a tick chart you might have paid up a few pips above there as it started to go back up, maybe around 57, and you can see it went back up to 80. So you could have made 20 pips on that pullback system. Also notice on the way down, incredible strength on the way up, less weakness, even less weakness. You have the support area of the previous week's high right here and the half number. Both are areas where there's usually buyer orders at. Very high probability trade, one of the probably 75-80% likely to work. Daily, weekly, monthly trends up. You're going in the direction of a trend after a big move up, another move up where it made a higher high, which is a sign of strength. Then it made a two-wave pullback. That trend's likely to continue. A lot of times these two-wave pullbacks, on the way back up, they go back up to the high or even higher. In this case, it kind of ran out of steam at our trading zone area. You can see on the way back up it wasn't that strong, so you get out of the trade with maybe 20 pip, 25 pip profit. That's still adds up. 50 pips a week, 200 pips a month, doubles your account every 2 months using very, very low leverage, reasonable position sizing, low leverage.